Hey everybody, welcome to another free edition of our Trader User Group Weekly Roundup. This is for the trading week ending October 25th, 2019. Everybody, I'm Preston Brent. Thanks for tuning in. It's been a lot of noise. Their signal to noise ratio is almost 50-50, so we're getting some mixed emotions, mixed signals across the markets, but that's to be expected as we approach all-time highs. This past week, we saw the S&P eke out just a kind of a small gain, the Dow falling just a little bit. A lot of investors are contending, couldn't see the word, contending with a mixed bag of Q3 earnings, while overall global economic conditions, they're continuing to slow just a little bit. So it's kind of making it a bit harder to discern the difference between the signal and the noise, right? We're also seeing companies topping analyst expectations for this Q3, but keep in mind the expectations are very, very low to begin with. We're seeing business activity slowing around the world. U.S. orders for durable goods kind of slipping a little bit in September, but I believe some of that, though, could be due to the UAW union strike, which hopefully it looks like it's going to be resolved here shortly. It looks like it could be with General Motors. And then you got the 737 MAX issues with Boeing. And all of these affect U.S. durable goods. So we're seeing some near-term stagflation in business also across Eurozone. A lot of these issues with China trade with U.S. It's kind of showing up now in a lot of the economic data. But we did get news from China and the U.S. that they're making good progress essentially with this phase one deal. So it could be a really low hanging bar like the earnings of at least getting something inked and showing more progress. But folks, as I tell our members, that's all we really need. Once that happens, that'll be another catalyst to provide some wind in the sails for the bulls. Okay. And keep in mind, we also have the Feds coming up this next week. There's about a 91% chance of a 25 basis point rate cut. And then we'll probably see a pause for the cause, going through the end of the year. And, if you look at analysts, it's almost split 50-50. Some analysts believe they're going to continue to cut. Others believe that's it. And we're going to have a very strong 2020. So if you're like me, you get a lot of email in your inbox. It's talking about the gloom and doom of the markets and everything is just Armageddon's getting ready to happen. That typically happens when we approach all-time highs. You've heard the phrase, bull markets are built on walls of worry. Well, this seems like it's just not a wall, but a castle of worry. But that's what's going on. Now, across over in Europe, we've seen this Brexit. It's like a piece of toilet paper that you just can't get rid of. It's stuck on your shoe. But this impasse continues to weigh on UK markets. The uncertainty still is rather high. And I think someone did some stats. The pound has lost over 13% against the dollar for the past year or so. And those companies that are still in the UK that get most of their revenue from within the UK borders, they're off about 25% more than companies in the UK that are more global in nature. So those folks in the UK are getting killed. And of course, Boris Bulldog Johnson, he's seeking to hold a snap election, I think, on December 12th to build a larger base in Parliament to help him get through his Brexit deal, kind of push it across the finish line. But it's not going to be so easy because he's got to get the snap election approved. And I think it takes 2/3 of a vote to do that. And they're fighting him every step of the way. So this saga can continue. And finally, this past week, we saw Super Mario Draghi's final meeting as the chair of the ECB. They pretty much kept everything where they said they would. The rates are still 50 basis points below zero. No new stimulus, but he's changing the guard. Now, the new leadership is going to be with Christine Queen Bee Lagarde, who was the former head of the IMF. So, one thing is clear, though, that he is leaving Queen Bee. The voting members are really divided over there on cutting rates more. I think they've pretty much had it with cutting rates more and favoring stimulus. It's almost half and half. It's going to be very difficult for her to kind of gain a consensus. But the one thing that all those members do agree on, and I think we hear this from Boom Boom Powell, our own illustrious Fed chair, who we'll hear from next Wednesday, is that they want to see more fiscal policies. And when you hear the term from the Feds, we want more fiscal participation, that means government spending. And of course, over in Europe, Germany is just known for being very tight with the dollar, but they're really putting a lot of pressure on some countries over there to do more fiscal policy stimulus. So we'll see how that kind of shapes itself out. But if we look at the chart that I have on the screen here, you can see the all-time highs. I mean, we're almost just a hair's breadth away. We reached 3026.50, which is 3 points shy in the E-minis of all-time highs on Friday's close. And the market's kind of moved up strong on hopes, the hopium of, China and the U.S. trade deal. They'll get something signed on phase one. They'll move forward in phase two. I can see that happening. And then if the Feds do cut interest rates next Wednesday by another 25 basis points, that'll provide more impetus for the markets to kind of move higher. Although I will say, every time Boom Boom Powell has stepped up to the podium, over 90%, over 90% of the time the markets have fallen. So just keep that in mind. He is not really good at choosing his words correctly. But the market's going to be discerning every word that comes out of his mouth. Typically what he does is he reads the statement first so he can't mess up. And the markets react to the statement. And then after the statement reaction, then he takes Q&A, and that's when the markets start generally selling off. But hopefully he's kind of learned his lesson. But he's had a dozen of these things, so I'm not really sure where he's going to be on this next one. But that's kind of what I'm looking at in the E-minis. You can see both the 50 and the 200 EMA. That would be the yellow line for the 200, the red line for the 50, pointing in the upward direction. You can see this value area sitting here at 29.87. That's where the bulls and the bears max volume occurred over the past 150 days. So it does seem to suggest we're going to make new all-time highs next week. And if we get participation with the Feds, I believe we'll do it. Now, if we look at the Dow futures for the week was down just a little bit, but for the day, it had a good day. I mean, it was up 125. But you can see here, and again, we've got an uptick in both the red line and the yellow line, the 50 and the 200 EMA. So again, fairly strong. We're sitting just above this value area here on the bulls and the bears, max volume at price. So that does suggest we got some nice support underneath. And then, of course, if we look at NASDAQ, that was up, the largest, and we came and in fact, a little bit closer in NASDAQ. The high was 8041.50. And it was almost 10 points, 10.25 points away from all-time highs in NASDAQ. So you can see here, and I don't see a lot of divergences in this trade. So I've been telling our members for the past 2 or 3 months that the markets just want to go higher. We're probably still going to have a move up. I've been saying 3150. 3,000 to 3150 over the next 90 days, and then we'll get a little bit more of a pullback. But let's just kind of see how it shakes itself out. It's kind of like holding a beach ball underwater. The minute you take your pressure, the pressure, the downward pressure of your hand, hold the ball underwater. The minute you take it off, the ball's going to, rise to the surface. And that's kind of what we're seeing in price action right here. Now, one thing that's kind of come around very strong, if we look at the Russell, okay. Now the Russell, all it's been doing is chop. This is a daily chart, right? So you can see on this daily chart, there's two big value areas for the Russell, okay? There's one sitting right here, and then there's one sitting right here. So we call it, it's kind of finally called the alligator chomp, so we're kind of in the middle between these two. So this is going to provide some serious resistance to the upside. That'll provide support to the downside. And it's not a surprise, because if I were to just kind of loosely draw in this range, this is where we've been since the summer months, since we made a 2019 high, not an all-time high, but a 2019 high. If we can break through here, we're going to make a run up and challenge these areas right up here. And that's what I want to see us break. And if we do make new all-time highs in the other markets, then I think you're going to see some risk on kind of atmosphere for this next week as well. We got about 150 companies coming out for earnings this next week. Google is going to kick it off on Monday. So I do believe again, so far the beat rate is a higher percentage than the 5-year average. But again, that's a beat rate on a very low expectation kind of thing. But the markets don't care. As long as you beat, that's what the markets are looking for. If you miss, then you get punished. And we've seen some miss, but then the markets kind of reverse themselves. It depends on what we're seeing. Is some stocks like Caterpillar miss, they go down, and then they have a really good earnings call where where they talk about what's going on and everything, and then it kind of reverses up. I mean, if we look at Amazon, it was kind of the same thing, right? Amazon had a really ugly day, and then because their expenses are rising faster than expectations because they're trying to factor in 1 day delivery for their Prime members. But then it kind of reversed around and came back up a pretty good little bit. I mean, if we look at the Amazon chart right here, you can see that on this daily chart, we kind of came down and hit this support area, generally around the 1700. But look at that green bar. We finished lower by 19 points, but we were down a lot more than that, right? Probably about 100 points, maybe a little bit more during the day, and then it just reversed back up. And you could see if I put it on a 2-hour chart, just how buyers came back in down here and just moved it back up. Or let's put it on a 15-minute bar. It'll probably show it a little bit better than that. So you can see here after that initial sell-off, I mean, we went well down here around intraday down low, and then it over in overnight action, and then when it opened up, it was already up off the lows. Okay, and then it opened around the 1700 area. It actually went down to 1618. Okay, which is amazing. And then it opened up almost 100 points from the lows in overnight action, and then it just proceeded to move up and then close in a tight range around this 1763 area, which is more of a support area. You can see, or this in this case, you can see has been a resistance or a support area, depending on the direction you're approaching it from. So I think Amazon is going to be choppy for a bit, but longer term, I think you'll see buyers come back into it. Okay. Boeing looks a little bit different. I mean, if we look at Boeing, you're going to see here on this daily chart, that looks like a head fake, a bull trap where it runs up and then it rolls right back over again. I think you will see more folks jump into Boeing, but they've got some cash flow issues with the reduction in 737 MAX orders. But they're still taking orders. I mean, they're still a very strong company, but I think buyers, you're going to see them starting to nibble in here the lower they go. But this does suggest it can come down lower. So I'd be very careful on Boeing and just kind of how it plays itself out, right? So these are just some of these high flyers that we had last week. Now, if we come back and we look at the transports had a great day on Friday. Look at this. We're back up near our resistance point around 195. That's a good sign, guys, with transports, because remember when we were down here in our weekly market, in our weekly roundup, I told you guys that if we roll over, the market's going to get ugly quick, and we've made some really good moves up off the top here. So I'm seeing some signs that the markets really want to move higher. So we're going to take a look and see how this thing plays itself out. And of course, whenever the markets get really crazy, look at this, guys. The VIX closed at 1265 on Friday. That is very low. It's time to start looking at long premium, which means long volatility again. All right, because we've just got a lot of risk on the front end of the curve here that can drive volatility up. But this does suggest that people want to get long the markets. So we're going to watch these. And of course, if we look at the front month vol skew, again, this shows we're solid in the green, so we're in contango. There's no fear in the market. And if we look at the back term structure, it's even lower. Look at that. So this just means the vol skew is normal in a contango environment, deeply normal. So whenever the markets get really crazy, you want to go take a look at volatility, make sure things are copacetic. If we look at the bond market, you can see here the bond market is continuing to drift lower. I think we're going to get a big move in bonds this week when we get more tell from the Feds. Okay, but this does suggest that bonds can go even lower in the markets here. So that's kind of what I'm looking at. And at the same time, the 10-year interest rate is slowly grinding higher, which I kind of said that's what it would do, which I also, as I was telling our members, we were picking out banks and we were looking at some bank plays. So that was, for our members anyway, a nice play that we were running on. Or, as I was telling our members, playing TLT to the downside, right? We were getting short TLT back up in this area here. So hopefully, I know a lot of our members took the trade in that. Now, if we look at currencies, and you look at the US dollar, if I just step it out a little bit, you can see this regression channel here. When we get towards the bottom, we want to buy the dollar. When we get towards the top, we want to sell the dollar. As we came down here near the bottom, just and UUP can be the proxy for trading the US dollar if you can't get at the dollar index futures. But you can see how it's moving back up in this direction right here. So the odds favor it to kind of drift higher. But if we get the Feds cutting rates, and we see that the euro or the ECB is going to stand down for future rate cuts, and if their economy starts to show some sense of growth, you're going to see the dollar fall pretty good. Of course, and if we look at the euro itself, speaking of the euro, you can see here with this regression channel, we're selling at the top. And we're not waiting to go short at the bottom. We want to short at the top of this thing. So we came right up above the center line. So it does favor a little bit of a lower move here. And you can see this value area sitting right here in the euros. So we're watching these really closely with the Feds because they're going to move currencies in the treasury market for sure. Okay, so you just got to be really careful. And then of course the British pound. This still looks like a bull flag right here, which suggests that it can go a lot higher. In fact, I had called 134. If they can get this Brexit deal all squared away, the pound is going to move back up and challenge these highs here, which is around 133, 134. So that pattern suggests it's going to go higher, but there's a lot of inherent risk in this trade right now of another drop. You can see it. This is just some profit taking on this initial move right here. Okay, so that's a little bit about what I'm looking at in the currency market. And if we look at some of these sectors from last week, the sectors that had the strongest moves, I mean, look at semiconductor, huge. We broke out to new highs, right? That's a huge break right there. And if I just kind of take it a step back, all new all-time highs right here on semiconductor. Right? And you may go, well, gee, keep in mind, semiconductor is a good leading indicator for equity markets. And this move suggests that the equity markets want to move higher. Excuse me. We could be setting up for a little bit of a divergence here, so just be careful of chasing this move right here. And then if we look at SMH, which is another semiconductor ETF, again, all-time highs. And if we look at Intel, because Intel is the one that kind of spurred it on, Intel came out with strong earnings and it just gapped up big time, right? I mean, huge move. So that helped semiconductors really placate because Intel actually raised their forward guidance. Everything was coming up green roses for Intel. So that really moved the semiconductors a pretty good bit. Okay. If we look at gold, right here again with gold, I'm waiting to cross the upper boundary of this regression channel. Excuse me. As soon as we do that, then I'm going to be, excuse me, looking at going long. For now, this is a profit-taking mode. As most of you guys know, we got long right over here. That was our long play. Made some great money on the move. Now we got this was a consolidation phase. This is kind of a consolidation, a little bit of a profit-taking phase, but I think it's going to move higher. Excuse me. Got something stuck in my throat here. Let's look at palladium. Palladium is making new all-time highs, right? And you're seeing here with palladium, I think that, and there's no divergence here. I'm waiting for a divergence. I'd like to see a pullback and then one final blast off higher. But there is no trade in palladium right now. We made the trade back over here in palladium, and we were able to take out about $25,000, $30,000 per contract. A number of our members did. So that's kind of what I'm looking at in precious metals. And then, of course, if we look over at oil, it's still hovering right around where I've said it's been fluctuating for almost the entire, from summer on is around 55 a barrel. Now we're at 56 a barrel. So you see we're sandwiched between the 50 and the 200. So I would say upside is limited. It moved up because we had a drawdown in U.S. inventories. But this is going to be choppy in a wider range chop in the 50s, at least for the next month, I see. Okay. Now, if we look at nat gas, Nat gas, if we have a cold winter, nat gas will move higher. Over here, I was having our members go long nat gas or UNG, and back over here, I was having them short the same. So we've been playing nat gas really nicely in these swings. We're kind of in the middle right here, so it's almost a no trade. I'd like to see a little bit of an overextension, either up or down, and then our interest will grow. There's some things that we've been playing in ag, meats, nothing in softs, but we're looking at them. Okay. And then, of course, we've got for our folks that like some really good value stocks and dividend players, as well as some key 5G stocks and some software stocks that have taken a really big beating. If we come back and look at the software index right here, IGV, the ETF, you can see the beating that it's taken. These high flyers have just taken a beating really since July going into August, and they haven't been able to recover yet. So now the issue is, do I buy here or do I wait and see if it falls again? Well, I want to wait for a signal to get a kind of an all clear. We've got to be really careful. If the markets do get more risk on, meaning more money's coming into the market, this would be a nice, dip your toe in the water and play some longs on the software side, some of the key software stocks, or just IGV, which is the ETF that tracks it. All right, everybody, that's kind of where we're sitting right now. If you're not a member of our group, highly encourage you to come in. We're doing really well with a lot of different things that we're playing, okay, along with some stocks that are very interesting to us. If you're a member already, I will see you this evening in our weekly market watch. Otherwise, make it a great Sunday afternoon, and I will see you guys later. Take care, folks. Ciao.